Hello, it is the 12th of July 2012, and if we start back at this week in here, we have encountered a total of 9 different periods or 9 different weeks, about 2 months of testing this mid 26 level, although 26 and a third is the number that's marked within Fibonacci retracement. So it's been a decent amount of time testing through, and what it looks like right now is that it really wants to break down below. Given how long it's taken, it's tough to say exactly how this thing is going to react, but with all of the tests of the 26 level, it is something to be very cautious about that it could eventually happen. Now, if we take a look at this trend line that connects the resistance points along with the support ones. So from point A to point B is what we're looking at here. And it just happened that it matched here. And then we start with the original low in here, which matches up with this low. It also matches up with this low. And it hasn't seen the bottom part of this range for quite some time. In fact, if I just draw a rough estimate to the middle of this, and I'm not going to get the exact, but I'm just going to try to get an estimate, we're pretty much finding support at this level. As you can see on a bullish case, well, hey, this former level of resistance is now being acted as support. And touche, I don't know, maybe it is, but I don't find it strong finding support on a downtrend line where you found resistance before. But with that being said, if of course it does manage to test the bottom part of this trend line, well, right now this trend line is really around that 21 range, so that's at that level of the bottom part that would have a good chance maybe of finding the range, because trendline analysis works, I think, fairly well. Let's move this on now to the daily chart. Again, it's most certainly a damage chart. We'll draw the first support line at the original low, which has obviously been taken out, and then the pierce below, which was occurred just a couple of weeks ago, is the next level. Looking at this through the 18-period average of highs, lows, and closes, it's a front-weighted average. And on a bullish level, I'm waiting for it to break above this and do what bullish markets do. It hasn't done that yet, but what it's doing is breaking down below this 18-period average in a downtrend, sort of like in here or in here, I guess even here. But making that, and a lot of times it can be fast moves, but it's not no definite for what's the case to be made. This has got a trend line as well that's been hit as resistance quite often. Let me just do it again, because that wasn't a straight trend line. That was one of the wacky lines, but here's a straight line, and if we try to find support within, this is more of a tighter range, but again, it's at the bottom part of this level. It's twice broken down below, and when it did, it never had big moves going down below. Let's now quickly take a look at the short-term time frame, and I'm usually using the 5-hour chart, but I'm going to use the 6 today, because the key thing is I want to show this high, and I want to show the low in as fewest periods as possible, which happens to be the 6-hour time frame. And that takes the high of 29.91 and the low of 26.13. So the Fibonacci retracement within the two lines you see really started as it was moving up here. It really didn't have much to do on the way down, but on the way up it did. So way up on the first set was a situation where it consolidated after it had a fast rush up to the level from its bottom. After it clearly broke through the resistance, it had a fast move up to this level, sold off and consolidated back up to this level in here, and then you can see how the line comes right down to this bottom part in here. Perfect hit in here, so it has some sort of bounce. And as I state so often, that when you find a level you're supposed to bounce from, and you do, and you make a considerably, in a downtrend anyway, a lower high, and you come back down, it increases the chances that you take that level out right in here. Well, it did take it out. And this candle's an interesting one as well, because you can see we have a line that brings us above it, so it came back up to this line in here. and then sold back off, perfect resistance here, and it's going lower. So it's not a bullish market. It looks as if a test of this 26.13 at minimum is going to be the case, but when the long-term time frame says a breakdown could very easily be possible, I think that's the best on a bullish level that could be done, and I still think it's probably going to have a pierce, at least break below the 26. If we adjust the Fibonacci retracement now from this low and this high to get a more shorter term analysis, the same chart, however, just change the lines a little bit, then this is what we get. So the ideology, methodology is that it's got to hold the second retracement level, so in this case here. So for this rally from point A to point B to be a failed move, it needs to hold and stay below there, which is exactly what has been the case. It did find support here on point A, and then it found exact support here, exact resistance in here. And now, of course, lately it's been stabilizing at this area, trying to find support, trying to find resistance. It found resistance. And, of course, same thing, heading lower. Looks as if, as well, from that point of view, that it's going to make another test within that 26 level, which again brings us back to the silver weekly, which had the quick little test here back in 2010, a bottom here after a small retracement, a massive elevator ride down that had a quick move back up to 33 where it consolidated it here, a escalator ride down which had a easy, not an easy, but a clear uptrend from that point. And like I said here, now it's been 9 weeks of just ranging between really 26 and change up to about 29 or so as the range. I don't know how long the range is going to last. It's longer than normal. Of course, the bear market from point A to point B, which is from here, that's been a decent period of time, and it's tough to say how much longer than that's going to go, but it could easily go longer because trying to find the exact whens for these things to occur, like how long it's going to take for a market to bottom or top can cause headaches if you're in too early. And again, on the daily time frame, it's been in a bear market since the 29th of February. Next week, it looks like this chart will be eliminated on Friday tomorrow. This will be eliminated Monday, Tuesday. So next Thursday, this top will be gone. So I'll have to manually, within my program, write in a high of 37.48 because it'll be over 100 periods within the downtrend. How long is too much? I don't know. I wish I could tell you, but unfortunately, I'm not able to. So thank you for tuning in, and have yourself a great day. Bye-bye.